Okay, good morning, everyone. Good to see everyone here. If you can hear me, type in the chat box. Today, event is open to the public. If you can hear me, also type in the comments box so that I know you can hear me. Fantastic. Okay, morning, James, Ifang, Elvin, Agnes, Larry, and over at the publics group, we have one Facebook user that's in. Okay, please like and share the post if you are in the public. Today, we want to talk about interesting topic about the market. We're going to talk about the opening of the China consumer market, at the same time, how it affects the stock market. Okay, first thing first, let me say my intention. My intention is at the end of the day, everyone will feel that you made the right decision to be here today. Okay. So whatever I share with you today is for education purpose. These are not advice to buy and sell. These are just entertainment and education purpose. Type yes if you understand. Thank you. Fantastic. Okay, let's get started. Oh, this recently I a bit rusty. Too long never do webinar. Forget to post Zoom link. Forget to rusty. Okay, hi Yang. Good to see everyone here. Okay, so let's get it started. Okay, so we're gonna talk about today. First thing first is on by now, you all should know that China is opening up. Type yes if you know. Okay, China is opening up, and but it's opening up very slowly. Okay, opening up slowly or very slowly. I believe that it will take maybe 3 months to really open up. Okay, so first practical tips, right, is before they fully open up, it is good to travel. Okay, just in case, if not, once they fully open up, you will see in your shopping luxury stores and things like that, they will be back there in and they have been saving money. Type yes if you know they have been saving money in last year. Okay, because nowhere to spend, right? Okay, nowhere to spend their money. They have been saving their money. Their savings right now is through the roof. Okay, so right now, after so many years of at least 2 years of saving money, right, they want to what? They want to spend their money. Okay, so this will actually cause I think number one, it's a balance. Okay, it's a balance. While US and the rest of us, rest of us who have opened earlier, may start to feel the effect of inflation. Those people that just started from just started to open up, they will start to spend. Okay, so that is there's a balancing act. That means that as we reduce, as US reduce, as Asia, those open up earlier has reduced in their spending. China will, catch up with the lag. Okay, so I think that will be positive. Okay, if you look at 2015 until now, their saving is a record high. Okay, their savings right now is record high, and this is a matter of time when they spend their money. Make sense or not? Okay. Number one is because they couldn't spend. Okay. Number two is right now they are given an opportunity to spend. Think about it. If you are someone from China and you've been trapped for 3 years, and now you're given an opportunity to travel and spend money, do you think you will think of saving money? And you have a lot of savings also. No lah, yeah, yes or no? You will just spend. Okay, so will that fuel inflation further? I think inflation is here to stay. Okay, inflation is here to stay. I'm not so concerned about inflation. Okay, inflation over a long time, it is good because you see everything is inflation. It is too much inflation. So with this balancing act, okay, with US slowing down in terms of spending and us maybe slowing down in terms of spending and then increasing, they balance out. Okay, so I don't think that is a big issue. Okay, US is in front of the rest. Okay, US increase interest rate first. Okay, increase interest rate first, and they are now talking about stopping. Okay, terminal rate being 5%. They are talking about maybe another 2 increase, then they will stop. Yes or no? I mean, there's a plan. Okay, do 5% or 5.5% as a terminal rate. However, the rest of the world is not there yet. Okay, they are doing that catch up. Okay, so as inflation sit up, the rest of the world will want to also increase their interest rates. Okay, so of course, at the end of the day, we will talk about this is the stock market, is not the economy. Even though we know what's happening in the economy, but how does it reflect in the stock market? I think this is the main question that we want to answer today. Okay, that's the main question I answer today in terms of how do you position yourself in terms of China opening up. What are the sectors, what are the countries that will benefit from this? Let me ask you a question. Okay, let's say assuming you are from China, and right now you have saved a lot of money and you have been trapped for 3 years, and right now you want to go out of the country, or you want to able to spend money. Where will you go to and what will you spend on? Type in the chat box. That's logical, guys. Where will you go to and where will you spend on? Luxury goods, yes or no? Luxury goods, right? Okay, I think it's quite similar to us. Yes or no? Quite similar to us when we will think life is too short, right? We have been trapped for 3 years. What if COVID restart again? You know, after 1 year opening, close back again. Do you all follow what I'm saying? Close back again. The new variant come out and we close back again. Wow, life is short. I spend more things on luxury goods. I may even think of going into spending bigger ticket items. I think that is the key. Okay, it is not thinking about spending money to save money, but rather spending money just because life is short, kind of thing. Do you all follow what I'm saying? Okay, so that is the idea. It's not about going cheap. Okay, the idea when they want to spend is not, hey, I buy this because it's cheap, but because I want to buy this because it's expensive. Okay, so they want to look for like luxury goods. They want to look for specific products that are not available in their own country. Yes or no? If I can spend on, if I can buy in my own country, I will not go out and buy. Yes or no? Same for us. We want to go into another country and buy unique things that are not available in their own country. So things that will benefit, okay, as an example, like luxury goods, of course, is about a balancing act, because the rest of the country may be slowing down. They may be China may be coming up to catch up the lag. So that may be a balancing act. Local brands, okay, local brands like that are luxury goods may also benefit from this trend. Okay, so so premium brand, okay, will outperform mass market brand. Okay, why? Because people want to buy better goods. Life is short, right? Better goods. Premium is a plus. Okay, premium is a plus. So don't think of like spending on Taobao and things like that, but rather the European brands, the brands they cannot get in their country. Okay, so that is a little bit of the big picture. But now let's talk about how it reflect on the current market. Okay, let's take a look at the China market first. 2823. 223 is more of the A shares, okay? The A shares in China, okay? So that is the A shares right now. We go into long-term time frame. So if we go into long-term time frame, you can see that they have more or less hit a bottom, okay? This was the previous lows, okay? The previous low was here, here, and then recently we hit a bottom, and they have actually recovered, okay? Do you still remember, right? Do you still remember maybe about 3 months ago or 6 months ago, there were a lot of talks about China bank collapsing, the narrative. Anybody remember that? Like, oh, China bank is going to collapse and things like that. Anybody remember that? Like me, remember that? About 3 months ago, only just very recent. 3 months ago, there were a lot of talk about China bank. I tell you the truth. I sometimes think maybe it is a conspiracy theory. People want to bank run, right? It's like people want to buy the banks, then they talk about negative of the banks so that they can buy the stocks. Yes or no? Okay. So if you were to follow the news and say, oh, bank run in China, is there any talk right now? No, no more talk right now. Yes or no? No more talk right now of this bank run or China's gonna collapse. Since then, because China A50 is a lot of is bank heavy, China bank heavy. Since then, it has went up 30%. Do you follow what I'm saying? Since September, where is that? October last year. Do you all follow what I'm saying? So if you were to listen to the news and say, wow, bank's gonna collapse, there's gonna be a bank run and things like that, you would have missed out that 80%, 30% run since October last year. Do you all follow what I'm saying? Okay, does it mean we trade against the news? Let me share with you a story. Let me share with you a story about news. Okay, some of you all heard of this before. Some of you have heard of this before. Let me share with you a story. There is this very this trader who decided to go around interviewing the top traders in the world. Okay, he decided he want to write a book. So he went around the world to interview the top traders. So traders, right, there are different personality. Some of them sit in the middle of the trading room, like surrounded by all the traders. People are trading here, and he's in the midst of the action. He's trading, the rest of his traders trading together. That is one kind of trader. There's another kind of trader who are like alone, in the room, detached from everyone else, just view at a computer and trade. Okay, and so there are different personality. But so one day he went to this more rural area, right, and interviewed these very successful traders. When we talk about successful traders, we're talking about traders that have like traded 10 years, in the 10 years, maybe 2 months of the 10 months losing, the rest of the months are all winning, things like that. Okay, so what happened? He interviewed this trader, and he noticed there was a pile of a newspaper. Some of you have heard of this story before. Some of you have not. So the pile of newspaper that's over there at the side. So what happened? He asked this trader, right? The question is, hey, why do you read news? And it's not only the newspaper for his country. He's reading newspaper from different countries. Okay, so he said, why are you reading news? Because majority of the traders that I've seen do not read news, but I see you are reading a lot of news. Yes or no? So how the trader answer is very interesting, and listen up. What he said is, I read news not to think of what to trade or not to have ideas of what to trade. I read news not to have ideas of what to trade. I read news to understand, to realize or to discover what the rest are thinking. Okay, I read news to understand or to realize what the rest are thinking. Do you all follow what I'm saying? So if the news is all negative, you know, bank is going to collapse, China bank is going to collapse, China, and you not only see in one place, consecutively on YouTube, on Facebook, on news, you keep seeing this news. What do you think the rest are thinking when you? What do you think the rest are thinking? There will be massive fear, yes or no? Correct. There will be massive fear. People will be fearful that, oh, China bank run and things like that. Then what they do? They will sell. Make sense? They will sell, or they will sell in anticipation of the crash. Yes or no? So you need to think opposite. Okay, you cannot think like the masses. So if the news is in such a way that when everyone believes in one view, then that view is wrong. Okay, if 10 out of 10 people believe in that same view, then that view is not correct. What I mean by that is, let's say if everyone in the world is bearish right now, so what will we do if we are bearish right now? What will we do if we are bearish right now? Next 6 months, we think the market is going to go crash and drop another 30%. What will we do today? We will sell. We will sell. We think we're buying back cheaper. We will not buy. Do you follow what I'm saying? So if 10 out of 10 people, all of them feel that the market is crashing, then the market will not crash. Does it make sense? Why? Because everyone who want to sell would have sold, so the market cannot go lower. Does it make sense or not? Okay, so the stock market is not so much of just looking at the earnings and things like that. It's about how people feel about the market. If everyone is negative, then it's positive. If everyone is positive, then you need to be more careful. Okay, this does not run in contrary to trend following. Does not run contrary to trend following. In trend following, the idea is not to buy at the cheapest, is to follow the trend. Do you follow what I'm saying? So let's say, example, 10 out of 10 people are bearish about the market. Suddenly, one become bullish, then 2 become bullish, then 3 become bullish. Then you notice, hey, the trend is going upwards. People are getting less and less bearish and more bullish. Then you ride the trend. So you ride the trend for 4 become more bullish, 5, 6, 7, 8, 9, 10. Do you follow what I'm saying? You ride the trend. By the time it reach 10 already, all bullish already, you need to be careful. You know, then suddenly 1 become bearish, 2 become bearish, then you get off the trend already. So the whole idea is, so trend following is not to buy at 1, because you know, don't know when is the extreme, but you understand, hey, the trend is changing, and then ride the trend, not buying at 1 or 0 and selling at 10, but riding from maybe 3 to maybe 8. That's the key about trading. Do you follow what I'm saying? Okay, so coming back, so this is a China market. Okay, China market is also quite related to Hong Kong market. How many of y'all bought China market or Hong Kong market in the last 3 months? Like me, if you bought Hong Kong market and China market in the last 3 months. Okay, I have also shared about my view about the Hong Kong market and the China market in the last 3 months, that it is like a area where you can buy. Okay, in Hong Kong it's even more obvious. Okay, I'm saying index is so more obvious. Okay, same thing, we look at the market, you can see that this was actually like a buying opportunity. We have like a crisis over here in SARS, you know, global financial crisis, some other crisis when COVID started, and then recently it even went below that when COVID started period. Okay, when COVID started period, even went below that. Okay, so right now, of course, it's recovered back to, so COVID was here. Do you follow what I'm saying? COVID was here, when in 2020 February, March area, when COVID was at the worst. Do you remember? Massive lockdown, everybody locked down. That was in 2020 March. Okay, Singapore also locked down, full lockdown. Okay, and it even went below that in October or November. Then after that, subsequently now it's recovering. Okay, so when you look at things like that, you understand, hey, this is actually a buying opportunity. And I also check live, every week when I do a webinar. Recently I do lesser because of December, but I've also mentioned the last few months, yes or no, to buy Hong Kong or China. Like yes, if you agree. Okay, so let's not neglect the public. Hi public, please like and share the post. Nobody like, only 4% like the post. Like and share the post. And yeah, for those people that want to be part of our SMT community, you can go to this link. Okay, join SMT community, CollinSeow.com/SWB. Okay, I do my weekly market outlook. At the same time, also been doing my weekly webinar since many years ago. Okay, so besides the 3 days course, we also do our weekly webinar. Please, for SMT graduates, you know what to do. Type in SMT. Type in SMT if you recommend SMT to the public. Thank you. Okay, thank you, Larry. Thank you, Chu. Okay, but those public also, if you are in the Facebook group, I don't know why. Okay, I also type in SMT. Thank you. Okay, coming back again. Is it hitting resistance? Okay, is it hitting resistance? Okay, so no need to think of resistance right now. Okay, so if you are long term, if you're doing dollar cost averaging, you're doing long term, then when do you want to sell? Okay, when you want to sell is when it reach the other side. Okay, that means when it reach the other side of the curve. That means from here, if it goes back to here, this part, then you sell. Okay, because from here to here, there is still a lot of room to move up. Do you follow what I'm saying? That does not mean it's going to move up in a straight line. It does not mean that it may be hovering, it may even go down, but eventually when you reach this region over here at the overvalued region, then we sell. Make sense or not? Okay, that yes, if you understand. So you're doing dollar cost averaging when it's coming down because you cannot catch the bottom. Yes or no? Because you cannot catch the bottom, you dollar cost when it's coming down. Okay, I think even right now at this period, you can still continue to buy. You can still continue to buy. Okay, maybe even after maybe reach halfway point, then you stop buying. Do you follow what I'm saying? And then after that, when it goes to this part, then you start to slowly sell some off. Okay, type yes if you understand. Okay, move this chat over this side. Okay, type yes if you understand. Thank you. Okay, so STI is about the same. Okay, we bought STI like, wow, now it's like a third year or 2.5 years ago. Yeah, we talked about this before, right? 2.5 years ago, during this period, somewhere in May 2020, we asked to buy STI. How many are still holding STI since then? Type me if you are still holding STI since then. Okay. So next question is Colin, then when to sell? When to sell? If you're long term, then by the way, while you wait, you still get paid, right? Yes or no? You still get paid every year. You still get paid 3%, 3.5% every year. Okay, it's a dividend that is paid out every year. So while you wait, you get paid. So when this price goes to here, okay, I don't know when, okay, or maybe here or here, then you slowly let go. Make sense or not? Okay, So the idea is to buy on massive fear. This is 2000 peak of COVID, and sell into hope. Okay, sell into hope. I mentioned this before already in terms of the economic cycle and stock market cycle, right? What is the next thing that we need to look out for? When does the market top? I'm talking about long-term time frame again. When does the market top? Anybody remember? When does the market top? So guys, if you zoom out, it becomes much easier to see. Anybody still remember? When does market top? Nobody. When does market top? Guys, remember? Okay, don't remember. Okay, never mind. Let me recap. So the day when they say we stop in very good one. Got one Facebook user, remember, when the Fed stop hiking. Okay, guys, when the Fed stop hiking, do you think the market will go up or down initially? Trick question, right? Initially, let's say, okay, right now we have inflation under control. Growth is good. We don't need to increase anymore. We don't need to reduce also. We have the Fed, inflation under control too. Do you think the market will go up or down? Up, initially, wow, yay, finally no more increase. You know, everybody will be excited. Yes or no? Everybody will be excited initially. Okay. This usually lasts for how long? Usually lasts for how long? Usually lasts for how long? Not few days, few months, few months. Okay, few months. Usually about 6 months. Okay, so that will begin the euphoria already. Do you follow what I'm saying? That will start the euphoria already. Oh, inflation under control. No, the corporate numbers are good. No, everybody is spending. No massive full employment and things like that. Everybody become excited. Do you follow what I'm saying? Then you need to be careful already. You need to slowly de-risk already. Got it? Okay, then you need to slowly de-risk already. So that is the period or the time when you need to be more careful then. Okay, I have done this many times, but I will do it again today since it's a new year. Okay. New page. Okay, so like this, right? So you see, even if I've done it before, people still forget. Yes or no? So think about it. When the market top, okay, this is S&P 500. I can go monthly, easier. Okay, so when does the market top? I'm talking about big cycles, guys. Okay, the previous top is in prior to global financial crisis. Like, good if you understand. Okay, prior to COVID. Like, good if you understand. Yes, you understand. Okay, so COVID, can you see here? Prior to global financial, this is global financial crisis, 08 and 09. 08, 09. Prior to that, can you see here? 07 May. When did they stop increasing the interest rate? This is interest rate, by the way. You see, when they stop increasing the interest rates, market goes up. Hooray, hooray, hooray. Yes or no? Okay. 6 months to a year. Yes or no? The top is about 6 months, or 1 year actually. Okay. The top is about 1 year. 1 year rise. Okay. And then after that, this period, after 6 months, you need to be careful already. Okay. Because you look around, everybody is like, oh, very happy. Then you need to be careful. Because after that, what happened? The market goes down. So before that, what happened? Market interest rate goes up, interest rate peaks. Got it? Interest rate peaks, interest rate flatten, be more careful. Then after that, market goes down. Yes or no? This is in global financial crisis. Okay, how about prior to COVID? Same thing. Okay, this is when interest rate peaks. Okay, interest rate peaks. Market interest rate remain flattened. Interest rate flattened. Can you see that interest rate flattened, market continue to go up? Yes or no? And then after that, when it start to drop, by the way, when it start to drop, it's no good. Oh, that's the topic for another day. Okay, but okay, conclusion is right now, what are we talking about? Right now, Fed, what are we talking about? Where are we right now? Do you think we're still going up? Yes, we are still going up. They say 2 more, 3 more, 4 more, I don't know. Okay, it's on the way up. Got it? Type yes if you understand. We are still on the way up. Have we reached a point where we stay, okay, everything is okay, let's stop increasing the interest rate? No, okay, we are not yet. Okay, and of course, so no need to worry so much. Got it? Okay, when do we need to worry? Is when everything is rosy, everything is good, everybody buying Birkin bag, buying Rolexes, then you need to be careful. Got it? Okay, I'm talking about here is long-term time frame, monthly chart. Got it? Okay, please remember this. This is not the first time I mentioned this, but I think beginning of the year I talked about this one time. Okay, I also recently did a master class on this before. Yes or no? Okay, type yes if you understand. Any question? Any question? Please like and share the post. We only got 4 likes. 133 people viewing, only 4 likes. Any question? No question. Let's move on. Okay, let's move on. Can we share the video? The video is on the master class, guys. Okay, if you go to the master class, you will see traders GPS class. How many of you all watch the master class already on this rising interest rate to the stock market correlation? Like me, if you watch it, nobody watch. Okay, so please go and watch. Okay, because I keep getting this question: market going up, interest rate how, things like that. So that's why I did a video for you. Okay, so this one, go and watch it, and then we will see. Okay, hi everyone, welcome to today's master. So when we talk about the interest rate and how affect the market, yes or no? Okay, I show you things on how the stock market do, things like that, right? And then what happened when interest rates rise and things like that. Okay, all have data. Okay, since 1950s to all the data. Yes or no? Okay, when interest rate rise, what happened in the stock market and things like that. Okay, all this, please go and watch it in the premium members area. Got it? If you have not watched it, go and watch it. We have I've prepared charts and things like that also. Okay. Okay, so by the way, those SMT graduates, if non-SMT graduates, we do master classes with our students. We talk about different things. We talk about like intermarket analysis. We talk about rising interest rate. We talk about trading psychology, different things like oil prices. Okay, so if you are part of this SMT community, all this masterclass is free for you every month. Okay, every month we have sometimes 2, sometimes 3. Like this month we got 4 master classes on the market. Okay, and these are all more training rather than more market outlook. Like today one is more market outlook. Those other things are more training based. Okay, it means strategy, psychology, strategy, methods. Okay, methods that we talk about it. Okay, so do go and join us in our SMT community. Okay, so any other question? Gold and silver. Okay, gold and silver. Gold is a what? By now you all should know, right? What is gold? Okay, so once you understand, right, like what is gold, what is silver, then you will know where's the place, ma. Do you follow what I'm saying? And also you will know intermarket analysis. I talked about this before, right? Watch this. Intermarket analysis. Okay. Commodity price, US dollar, stock market, bonds. Yes or no? How they are related. Anyone remember how the commodity, US dollar, stock market, equity, and bonds, how they related? There is a correlation, yes or no? So if you understand this intermarket analysis, you bring everything in, watching what's happening in the economy right now, then you know, hey, how to position yourself right now. How many watch this intermarket analysis? Type me if you watch it. Type not yet if you're going to watch it this week. Okay, go watch it, okay, guys. Okay, good. Watch what is intermarket analysis. So I see so many. Sometimes I don't want to do master class. Because so many when I watch. Is it because it is free? That's why I don't watch. Partly, I share with you the truth. The truth is because it's free. Sometimes people don't watch. Agree or not? Type yes if you agree. Type yes if you agree. I agree. Sometimes because it's free, I say, free, watch later because it's free one. Oh. So sometimes got challenge like that. Okay. Charge, people complain. Don't charge, people don't watch. Okay, watch on the to-do list. Go and watch, okay? It can watch again also. Okay, it can watch again also. Mr. Tan, you should have the login. Okay, go and find out what's the login. Okay. Okay, let's go about gold. Okay. Okay, first thing first, before we talk about gold, let's talk about my view of gold. Okay. Don't talk about the market first. Gold for me is not an investment. Not an investment. Okay. Gold for me is more of a hedge. Okay. Whether is it physical gold, physical silver, or things like that, it is not investment. It's more of a store of value. It's like an insurance, that's all. Okay, it's like an insurance, that's all. Okay. So in a situation when there is massive fear, okay, there is massive fear, gold will rise in value. But is it true or not? Actually, not true also. Okay, do you all know it's not true? Do you all know it's not true that those narrative, right? You all watch the narrative, right? You all read the narrative. Narrative, what's the narrative? The narrative is in a crisis, yes or no? In a crisis, gold will do well. How many, like me, if you heard of this before, like that's why you want to buy a hedge, correct or not? But is it true or not? Actually, it's not true. Okay, it's not true. Okay, it's not true. Why? Because in crisis, like in global financial crisis, yes or no? Okay, global financial crisis, what happened to the gold price? Also go down, yes or no? Or 08, can you see? Also went down, yes or no? Oh, and same thing lah. So it is not so much of maybe you can say in terms of relative lah, relative to the rest. Okay, relative to the rest of the market, but you cannot say it is. I mean, relative to the rest, everything is down. Maybe they are down lesser. Got it? That yes, if you understand. So that's why it's a hedge. But it does not mean that when crisis means gold will go up. Not necessarily the case. Got it? Ukraine is so it's not Ukraine, that one is not a crisis lah. Crisis I'm talking about here is like global financial crisis, you know, things like that. Okay, not the kind of like global crisis. Okay, so normal like price ranges when fear and things like that, yes, But we're talking about like big economic cycle, then may not. Okay. Why is it so? Do you know why is it so? Why is it that they move similar? It's because they are also like a instrument. They also like an instrument. Okay, they also like an investment instrument. So, but if you say that relative to equity market, relative to the equity market, of course they do much better. Got it? Okay, so Joshua, I think it's in gold business, right? Joshua, you are in the physical gold business, right? So look for Joshua if you want to buy gold. Okay, is it okay? You buy physical gold, we'll look for him. Okay, so gold I think is in a sideway. Okay, sideway. At this current moment, not very interesting. Okay, not very interesting. But if you ask me, silver may be more interesting than gold. Okay, silver may be, I shared our silver before, right? Okay, silver may be more interesting than gold. You see, gold and silver has a ratio. This one Joshua should know, right? Gold and silver has actually a gold and silver ratio. Do you know what's the ratio? What's the ratio? Okay, I'm not a professional. If I didn't remember wrongly, the ratio is about 50. About 50. And in the last few years, the number has gold has went up a lot relative to silver. That means the ratio is out of whack. Okay, partly is because of the manipulation of silver. By now, some of y'all would know this already, right? That yes, if you know, that no, if you don't know, there's a manipulation of silver, right? I won't go into the details, okay, because there's another big topic, okay. Okay, maybe then I do a master class on that again. Okay, so there's a manipulation of silver, but eventually it will unwind. Okay, when it unwind, it will go. So if you talk about silver, right, I think silver has a better potential than gold. Saying that they can continue to manipulate silver. Okay, that is the challenge. Okay, but gold relative to silver, it is out of whack. So you can see, right, that silver is here. Silver is here, $22. The peak of previous silver was for $50 in $46 in April 2011. Okay, April 2011. And we go look at gold. Gold has April 2011 here, right? April 2011 here. So you see gold, right, has surpassed its April 2011 goal. Yes or no? From here, since April 2011, you see on top, right? From here, right? April 2011. Since then, right, it has went up 24%. Do you follow what I'm saying? Since April 2011. Okay, but if you look at silver themselves, gold has went up, yeah. But if you look at silver themselves, since April 2011, okay, since then, silver is still down. Silver is still down 53%. Do you understand what I'm saying? So since April 2001, gold has went up 20%, but silver has went down 50%. Do you follow what I'm saying? So relatively speaking, silver is undervalued. Okay, the challenge is because it's being manipulated. When will that ratio go back to in line? Don't know when. Got it? Okay, so I think any question for the public? We have like 8 likes right now. Okay, better than 4. We got 100% growth right now. Fantastic. Okay. Any other question from the public? SMT graduate can also ask any question. No need to be related to it can be general questions. Do you expect earning recession in US and lower stock price because of that? Okay, so again, that's what I mentioned already, okay? The stock market is not the economy. This one you must remember. The stock market is not the economy. The stock market is driven by what? It's driven by what? Sentiment, okay? Manipulation. Manipulation, this is manipulation, right? It's driven by what? Sentiment. How people feel about the market, manipulation, things like that. Okay, so that is what the stock prices are driven. Do you follow what I'm saying? When we talk about earnings, when we talk about all this, it's more of the economy. Does it mean that when earnings go up, stock price will go up? Always the case? No. Okay. Have you seen announcement, right? That people announce unexpectedly good results and the stock price still crash? Have or not? Yes. Have you seen stocks like announce very bad result and the stock price still go up or not? Yes. Why is it so? That's what I mentioned that. Okay. Stock market is not the economy. If not, it doesn't make sense. Right? Like an example, like Simon who died, share price go up. What is the correlation? Do you follow what I'm saying? So nowadays I have a lot of very, very smart people. They are previously investor. We're talking about like very, very rich people. We call them old money, old wealth. Okay, old wealth. People with lots of money in Singapore, and they are also changing their view. Some of them are very long term last time. Their parents' time they're very long term, but they're changing their view. He said, actually, it doesn't really go back to the value. Sometimes it may not, you see. Okay. So if, let's say, example, a majority thinks that the stock market will drop or rise, so don't think about that. Okay. So again, back to the same story just now, right? News. It is not the news. News is what we read about. Yes or no? News is what we read about. News is like, we're going to recession and things like that. What is more important than the news? Okay, guys, what is more important than the news? Is the reaction to the news. Got it? It's the reaction to the news. So you must stop thinking of letting news to dictate what you do. By now, you all should know, right? That's how I mentioned about the China bank run already, right? You should not let news dictate what you do. Do you all follow what I'm saying? Don't let news dictate what you do, but rather have another level of thinking is think about the reaction to the news. So which is more important, the news itself or the reaction to the news? The price itself. Price is more important. Do you follow? As a news is not important because it's the reaction to the news that is the most important. Do you all follow what I'm saying? Hello, I see. That's why I talk about the China thing already. Okay? Correct or not? Example, another one, China Tech. Thanks for reminding me. China Tech. Have you all remember that China tech story? That like all the China Tech is cui and going to be very bad. Yes or no? Yes, you remember? That was like how many months ago? Also forgot. How many months ago? What's the China Tech ETF? What's the ETF for China Tech? 3033, thank you. So remember that narrative, not guys? Like China Tech is gonna die and things like that. Yes or no? The narrative now don't hear anymore. Yes or no? Not so much. Yes or no? But since October, right? Since October, it has rise up 60%, brother. Do you follow what I'm saying? If you go and listen to the news about China Tech going to die, they're going to change the thing and things like that, then you are the one to so like, That yes, if you still remember that China tech story at the time. Oh, don't always get fooled by the narrative, okay? Okay, guys, because we are SNT graduates, right? SNT graduates is the one that fool people. Okay, don't get fooled. Do you follow what I'm saying, guys? Okay, so see the price. Okay, stop reading news and deciding what to do after you read the news. Oh, recession is coming, or sell everything. Okay, got it? That yes, if you understand. Okay, so if you were to believe the narrative or China tech is going to collapse, China bank, you miss out a 60% run. Okay, and it's still going up. Yes or no? Okay, guys, I think we call it a day for the public. Let's have some time for SMT graduates. Okay, for the public, please consider joining us. Okay, the fact that we still have right now 314 of us in the SMT community every single week means SMT has some benefit. Yes or no? Okay, so you have not joined us, I suggest go and do a due diligence, find out why is it that 314 of them in the Zoom class. Okay, in the Zoom class over here, 312 of them is in the Zoom, and we have 130 of them in the public group still join us every single week. Okay, go and do a due diligence, go to CollinSeow.com/SWB to find out. Okay, so if not, then let's say bye to the public. Okay, and we have a private meeting right now. Say bye, guys.